I don't even know where to start today. What a crazy week we've had. I mean, I don't know how about you guys, but I'm trying to keep smiling through this. You know, watching your portfolio go down in value hundreds of thousands of dollars over the course of a week is painful, to say the least. I don't even know where to begin. Anyways, we talked about pain in that last video. Today, I want to talk about dollar cost averaging because I think it's super important when the stocks have been crushed down to these prices. If we're considering buying shares, how that affects our dollar cost average. Well, hello everyone. Welcome back to Drawbridge Finance. My name is Levi Woods and this is an opinion channel about money. Now remember, this is not advice that I'm giving on this channel, but I know that we are going to make a ton of money over the next couple of months because this market has crashed and burned and the feds have stepped in. They dropped the interest rates down to zero, which is crazy. And that means that, well, people that are considering refinancing their mortgage, this might be an incredible time to do that. I'm going to do a video on that next. So make sure you hit that subscribe button down below, turn on your notifications bell so that you know every time I'm doing a video, because the information that I provide on this channel is going to make us a lot of money over the coming months. Anyways, today I want to jump right into this. The S&P 500 is up 5% today. Now, we had a crushing day yesterday on Monday. Happy St. Patrick's Day, by the way. I'm not wearing green. I should have, but maybe later when we go out for some green beer. Speaking of going out, have you guys been in the grocery stores? Oh, my goodness. I was at the grocery store yesterday and the shelves are decimated. People are just buying like crazy. Now, I was in Tokyo, as you know, for a month and a half, and we were like completely on lockdown for the last 3 weeks of that. There was stores shut everywhere. So I've been experiencing this lockdown scenario for quite a while. And we know that it worked very, very well in Japan. They only have like 7 infections per million people at this point in time. So I'm staying home. I'm watching lots of YouTube. I'm like watching these markets like crazy. And today I was buying stock. Now, of course, all my patrons already know about that because I make those posts as soon as I do the trade. So if you really want the up to the minute information from me, that is the place to follow, is on Patreon. Now, today I want to talk about a couple of things. I want to talk about sectors that I'm looking at that perform well during recession. So obviously utility stocks are a big one. Now, oil has been absolutely crushed right now. So I'm looking at oil service stocks as well. And that's one of the things we're looking at today in the trade that I made this morning. And I'm going to show you how that dollar cost averaged another trade that we had made prior to this. The other sectors that are good, that really get hit hard, are financials. So we've already seen that happen. The banks, the Canadian banks are still sliding a little bit. Today, there's a little bit of recovery. There might be some more downside, but that is definitely a sector to watch out for. So oil, utilities, finances. And what's the other one? Oh yeah, the big one, real estate. Obviously, with interest rates going down, all of these REITs are going to do extremely well because their mortgages just got cheaper. So that's something that I'm looking at as well, is real estate. Now let's jump right into this. I'm going to show you a little chart. Now these will be available to my patrons coming up next month. Anybody that's in the Dividend Investors Club and the Options Trader Club will be eligible to download this as part of their rewards for their tier. But if you're interested in purchasing it, you can just go over to my Etsy store. I'll have it available right away. And you can download this. It comes with the Mac numbers format as well as the Excel format. And I'll show you what it looks like. It's a fairly basic looking chart, but it has a lot of complexity in it. Some of these formulas that are in these cells that automatically calculate are quite complex. And that's why I've built it, because it makes it easier for me to track my own dollar cost averaging. So we're going to look at 2 posts. Now, these were both made on my Patreon page originally. So we're going to look at a stock today, which is IPL. So when you're opening a new sheet like this, I often put it just in the date category here, but I put in IPL so I know what stock I'm actually tracking. You can see back in May 9th of 2019, we bought 200 shares. We paid a commission of $9.99 and we bought it for a total per share value of $20.77. What this chart does is it actually calculates out the rest for me. It tells me what my total transaction value was, the numbers of shares that I currently have, and it tells me my adjusted cost basis in Canadian. Now, if you're an American watching this, I have US dollar versions and I have Canadian dollar versions. And as a bonus, when we get to the end of this, I'll show you how you can purchase Canadian shares like IPL if you're American and take advantage of the ridiculously low Canadian dollar right now. So the next thing it calculates out is the average share price. So you can see that we paid $20.77. And with our accounting practices here in Canada, at least, the commission price counts towards a cost of purchase. So it goes into the transaction total, which means our average share price is actually a little bit high. This $20.82 is how much we spend if we include the amount of commissions. Today we made a trade, and in this case, I'm just going to fill this out as if I bought 200 shares. So the first thing we'll do is we'll enter the dates. We're going to go 2020 and March 17th, and then we'll put in 200 shares. Now with these sheets that I build, the only cells that we ever fill in are the white ones. The yellow ones never get filled in. So we just fill in the white ones and we just tab over. It makes it really easy. I also keep them all close together so that you can copy and paste if you're doing like drips, which is a really convenient way to take care of these charts. Now, my commission prices have dropped since last year. So instead of paying $9.99, I'm actually only going to pay $2 or 1 penny per share for this trade. And the price today that we got was an amazing $9.86. So as soon as I hit enter there, it's going to show the transaction total today, which was $1,974 Canadian. It increases my share balance. So now we have 400 shares, and that's the 200 that I purchased here and the 200 that I purchased today. My adjusted cost basis is a running total. So the total amount that I've spent so far to date is $6,137. And it shows me my average share price of $15.34. You can see how dollar cost averaging works to my benefit in this case. Originally, I bought shares for $20, and now I bought an equal number of shares for $9.86. So the price now, if the stock went back up to $15.34, that would actually be my break even. Let's take a look at the stock price for a second. I'm just going to go over to Yahoo Finance and look up IPL. Inter Pipeline Limited, here it is. Let's just look at the 5-year chart. Now you can see that this is actually downtrending a little bit. Oil has been quite crushed down these last couple of years. The price per barrel is going down. That affects everything that's oil related. This company is actually a pipeline, so it's an oil services related business, and it has nothing to do with actually selling oil. They just pump oil from place to place through their pipelines. But there has been a little bit of correlation between the price of oil and the price of the stock. That 200-day moving average is moving down slightly. But right now, the stock is trading way down here at under $10. So as you can see, it's an extremely good deal. If it comes back up to our average price of around $21, then we will easily blow by this new adjusted cost basis of $15 average price per share. And that's the power of dollar cost averaging. Now, we don't have to go all in like that. I don't have to match my shares equal parts. I could put in whatever amount I want. If say I only bought 100 shares today because I'm leery and I want to just buy small chunks, which is totally understandable. I mean, in today's market, everything is going crazy. It could go down further. Then that would adjust my average price to $17 per share. Now, this is important if we're tracking for income tax purposes. If we're trading within like a Roth IRA or an RSP account, those don't really matter so much because it's just money in, money out of the account that needs to be tracked. But if we're trading on a margin account, which happens as our accounts grow, this is very important information that we have to keep on hand for potential audits or for when we're doing our income tax reporting. And that's exactly what this last column is. This is a gains by year. So if right now you can see the capital gains and losses are zero, but what if I decided I wanted to sell some shares? Say I bought 200 shares and then sometime in the future, maybe next month, I decide to sell some shares. Well, I can put in a negative 200 in here and it will automatically populate out that this is a sell. So if all I'm doing is entering the data here as negative 200. And then I'm putting in my commission, $2. And then the price, maybe I sell those for $15 a share. Now it tracks my gain or loss. Now, if I sold them for $15, I would still be below my average price and I would actually have a loss incurred of $71. And that's where the power of this spreadsheet comes in. It actually shows the gain or loss specifically on the number of shares that we're selling. We could sell 10 shares and it would tell us that we lost $5.45. Now, if we're lucky, I don't really know if luck has much to do with it, but when the price of this stock goes back up into the 20s, maybe we want to take some profits. So maybe in May or June or whenever it is, that stock is trading at $21. That's where we could sell some shares. Maybe we'll sell minus 50 shares, and we can lock in some of our profits. So we can have like a capital gain of $280. Selling off the shares doesn't actually change the average share price. And that's where the complexity of this particular spreadsheet comes in. Now, of course, my spreadsheets aren't locked either. So when you download them, you're actually able to go in and modify the formulas, look at the formulas, do whatever you want if you want to customize it in any way. I've done some fun little things in here that I think are good. For example, if you try to sell shares right off the bat, it actually returns an error. I make it all light up in red. Or if you're in a situation and you're entering something incorrectly, right now we have 350 shares in there. What if I tried to enter negative 400? That would also light up red and show that we have an error somewhere in the chart. So by putting in this data, there's a couple of things that try to help you make the data input as clean as possible. Now, the other thing that we should look at is that this actually has two tabs in it. It has Canadian dollar one, and then it also has a US dollar, foreign dollar one. And so it's the same information on the left-hand side, but what is calculated in here is the exchange rate. For my American subscribers, if you're thinking, well, you want to diversify your portfolio, you want to get into a Canadian pipeline that pays a huge dividend. The dividend yield right now is 15%. Like, this is massive because it's paying $1.71 divided over the year into 12 monthly payments. Now, for my American subscribers, if you want to buy this, you could easily, and I'll show you how to enter it into the chart. So the exchange rate right now, the Canadian dollar, as I said, is just being crushed today, is 0.70. Let me just put this into context for you. Let's look at a Canadian dollar chart. So let's look at today. It's gone from 71 down to 70 cents, but let's look at the 5-year. I know this is really small, but back in January of 2016, it went down to 69 cents. So at 70 cents right now, it's almost at the 5-year low. Just about there. I believe it did touch it today. So an extremely good time for Americans to be buying Canadian stocks because the stocks are cheap because our dollar's cheap. Not so good for us Canadians to be buying American stocks, but at the same time, the American stocks are crushed down as well. So we're going to make money either way. I mean, it's becoming a really great time to see a lot of cash flow into our account. Now, I use XE to find my exchange rates, and you can see right here, the live exchange rates, 1 Canadian dollar to US dollar is 0.70230. And so that's what I would enter into the chart. So I don't know, I'd have to look this up, but it was probably 75 cents a while ago, and now it's 0.70230. The transaction total calculates out in Canadian dollars, but then with the exchange, it calculates out the total cost, dollar cost average in American dollars. So the American dollar purchase price would be $11.27 with these two transactions. I hope you kind of get the gist of how this functions, this particular chart. Now, as I said before, these charts are going to be available on my Etsy store. They'll also be available to my patrons in April. Now, the real question here is whether or not it's a good idea to dollar cost average just because you can. Because you look across the board, you probably all have stocks that you purchased for a higher value than they're currently trading at today. So by buying more of those stocks at these lower values, you're able to dollar cost average. But that might not necessarily be the best strategy. I still firmly believe that if the stock is at a good value and we're looking at the valuation only, then we should be making that decision based on the current valuation and the current outlook of the stock, but not at whether or not it's just dollar cost averaging, because that you can chase that all the way down. You could have stocks that are continually going down and you just keep buying more and more and more and keep losing more and more and more. And that's not really a smart investment strategy. So we actually took off some stocks last week. We made some sales and we were talking about buying them back at lower values. And then today when we were assessing them, we actually decided to put that money into other stocks rather than put them back into the stocks that we sold off last week. The reason for that is we're looking for even more downside on some of those stocks that we sold last week. The details are on my Patreon account, so you guys can check those out if you see fit. Now, before I go, I want to talk for a second about refinancing, because with these interest rates at zero, essentially, we're having zero plus whatever your bank decides. we are going to be able to refinance our mortgages for an extremely good value. So I'm going to be doing a video later on that. So stay tuned, because I'm going to show you one of my mortgage charts where we can calculate how much interest we're paying and how much interest we're saving if we decide to refinance our mortgage. Stay tuned so we can all get rich together. Thanks so much for watching, and see you very soon.